Hello students, welcome back to GK's Education. As we all know, the retirement or death of a partner in the partnership accounts is going on. So we were doing the topic of goodwill. So in the previous video, we did the topic when goodwill does not appear in the books. So in that case, there were 4 cases which we did in detail with examples. And now today we are going to do the second part in detail when the goodwill already appears in the books. I would like to request that if you're liking my videos, if you are getting your points very much clear, please do not forget to like and subscribe my channel. So let us come to the point. Our today's topic is when the goodwill already appears in the books, and also we'll be covering hidden goodwill, the treatment of hidden goodwill in the case of retirement or death of a partner. So let us complete the second part of goodwill first. When goodwill already appears in the books. So here are some cases when at the time of death or retirement the value of goodwill may already appear in the books of the firm. So there are few cases. Number 1, if the value of goodwill already appeared in the books of the firm equals with the current value of goodwill, normally no adjustment is required. That means if the value of goodwill appearing in the books is suppose 60,000, and we are at the time of valuation it is again 60,000, so no adjustment is required in that case, because the goodwill stands credited in the accounts of all the partners including the retiring one. Because in that case, when we raise the goodwill, we know we credit the existing partners in the old profit sharing ratio, so definitely amount of goodwill is there. If the amount of goodwill is debited, is appearing in the books at some value, the similar credit will be there in the partner's capital account also. Now in case the present value of goodwill is different from its book value, an adjustment entry is required for the difference between the value appearing in the books, that is book value, and its present value. So when we need the adjustment, we only need the adjustment when there is a difference between the present value and the book value of the good. So how we do it, let us check it out. The first case is if the book value of goodwill is lower than the present value. When the goodwill's value is lower, in that case we have to raise the goodwill up to the present value. So in this case, the goodwill is raised to the present value by debiting the goodwill account with the excess of its current value over the book value. That means only the difference between the two will be entered, and crediting all partners capital account in their old profit sharing ratio. For example, it will be very much clear with the help of this example. Let us check out. D, N and R are the partners sharing the profits in the ratio 5:3:2. Now goodwill appears in the books at the value of 20,000. N retires, and on his retirement the goodwill is valued at 24,000. Now pass the necessary entry. So now goodwill is 24,000, but the book value is 20,000, so the difference is 4,000. We have to raise the goodwill up to the value of 4,000, as 20,000 is already appearing in the books. So we will do the entry. Goodwill account debit with 4,000 to D's capital, to N's capital, to R's capital, 20, 12 and 800 in the ratio 5:3:2. So it is with the increase in the value of goodwill credited to all the partners capital account in their old ratio, that is 5:3:2. So this will be the additional entry which we will be passing in our books. Now second case comes out. The second case is if the book value of goodwill is greater than its current value. That means if the book value is more as compared to the current value, but actual valuation at the time when we are doing is less. So what will we do? We will write off that amount. How? In this case, the difference between the book value and its current value will be credited to goodwill account and debited to all partners in their old profit sharing ratio. Or in other words, we can say that we will write off the excess amount of goodwill and goodwill appearing in the books. Let us take an example. M, G and S are the partners sharing the profits in the ratio 4:3:1. Now S retires. On S retirement, the goodwill is valued 52,000. There was a goodwill account already appearing in the books with the value of 60,000. Now pass the necessary entry. Now goodwill account will be credited with the difference of 8,000 that we have to write off, and all the partners capital account will be debited in their old profit sharing ratio, that is 431, with the difference of this amount, that is 4,000, 3,000 and 1,000. Now this will be the entry at the time when the goodwill's value is excess or greater than its current book value. Now few points which we have to keep in mind. It may be noted that all the above situations, goodwill appears in the balance sheet at its full value. Means in all these situations when we raise the goodwill, the actual value actual value calculated at the time of valuation, the goodwill will appear in the balance sheet at its that value. In case it is decided by the partners that it should be written off fully or partially, it can be done by debiting the remaining partner's capital account in the new profit sharing ratio and crediting the goodwill account. It means if after bringing the goodwill at its actual valuation, the partners may decide to write off the goodwill, so if for the coming time, so if they do it, in that case the new partners, the existing partners capital account will be debited and goodwill account will be credited, and that new partners capital account will be debited in which ratio? In the new profit sharing ratio. So it will be kept in mind very clearly. So this was all about the treatment of goodwill in the case of death or retirement of a partner. So let us move to another very simple topic, that is hidden goodwill also. Hidden goodwill, as we all know. Yes, hidden goodwill. uh, if the firm has agreed to settle the retiring or deceased partner's account by paying him a lump sum amount, then the amount paid to him in excess of what is due to him based on the balance of his capital accounts, after making the necessary adjustments for accumulated profits and losses and revaluation of assets and liabilities, etc., shall be treated as his share of goodwill, or is known as hidden goodwill. Hidden goodwill means the goodwill which is not appearing in the books as such, or we have to assess the value from the transactions done in the books. We have to infer that value. So here in the case of death or retirement of a partner, we have to finally pay him the lump sum amount. So the difference between the amount actually paid and the amount due to him as per his capital account, the difference between the both is called the amount of goodwill. It means if the take an example, if we pay the outgoing partner rupees 60,000 and as per his capital accounts we have to pay him 40,000, so the difference, the excess paid over and above his capital account, is called the hidden amount of goodwill. So let us check it out again with the help of this beautiful example. P, Q and R are the partners in the firm, sharing the profits in the ratio 3:2:1. Now R retires and the balance of his capital account after making the necessary adjustments of reserves, revaluation of assets and liabilities, etc., comes out to be 60,000. Now P and Q agreed to pay him 75,000 in full adjustment of his claim. Now goodwill will be actual amount settlement is 75,000 and the balance of capital account is 60,000, so goodwill is 15,000. Now the entry will be P's capital account, Q's capital account to R's capital account 15,000. So R's share of goodwill adjusted in P's and Q's capital in the gain ratio, that is 3:2. How? As nothing is mentioned, as it is assumed to be same. We did it in the very first example of calculation of gain ratio. When there is nothing is told, so they consider that the remaining partners move in the same ratio, as so it is same as 3:2. Now this was all about hidden goodwill. I hope you are liking my videos, you are getting your points, your topics, your concepts very much clear. So keep going on, keep learning, and do not forget to like and subscribe my channel. Thank you.